What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic. Today we're going to look at Tesla's daily chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow. So what a day. We had earnings coming out after session. A lot of market movement, a lot of hype in the market. You can see still in post-market or after hours, we're down to 233.15, seeing a little bit of a bounce, got all the way down to 230 and held that level. Like I said, we're seeing a little bit of a bounce now. So a couple things I want to notice that I took off my chart now, but we had that ascending triangle. And unless something miraculous happens tomorrow and we pop back in up near the 249, 248, 249, 250 range, that is a very clear breakdown on the daily chart where we closed well below that triangle. So I'm going to take it off for now. We could see a big pop tomorrow or into the end of the week and maybe get back into that ascending triangle. It would be a fake out if that happened. But what I do want to note on the daily chart is we had our liquidity levels. Right, we had our internal liquidity here. We had our external liquidity down here. We have further internal liquidity in this move, and then we have the equal lows and sell side liquidity down below even further, down at the 212 level. So we took out a lot of that liquidity today. We took out this fair value gap that we had been talking about that had been respected. So we'll go ahead and delete that off our chart. Right, I'm not going to delete this now, but I will delete it tomorrow. And we went ahead and took that out. Even though we're below it now, I'm going to mark our previous day low right here because that's where the candle closed. So let's go ahead and annotate that on our charts now with previous day low. We'll adjust our previous day high to represent today's price action, where our previous day high came in right below 255, and we still have our daily volume point of control. I'm not sure if that changed. We'll look at it adjusting that later on in the week if we need to. But as far as upside targets from where we're currently at, we're down here below sell side liquidity. Again, this is a swing liquidity, so we're calling this external liquidity on the sell side. So we're below that. We came back down. If we were to head lower tomorrow, say we opened somewhere in this range, head lower tomorrow, we're taking out 228. Even lower than that, we're heading all the way down to 212 to these equal lows. Now, if you look at the RSI, right, it does support that we could come back down and take this out. It might be a sell down, pop up to the moving average control line, and then sell down further for a more extreme reading. So we'll have to be monitoring that to see what happens. But we do have nice selling here, a little bit of consolidation, further distribution to the downside. And do we want to see this all complete? Again, this is where current price is. So we'll have to see where price opens tomorrow. We certainly could open gap down below this liquidity and then just bam, sell off into the end of the week straight down to 212. Totally a possibility. I'm not expecting it so much, but it is possible. Earnings were a miss. Guidance wasn't great. Elon came out and did his deal, said some things, crashed the stock as usual. So not sure why we put so much hope in him. I know a lot of people think he's a genius, but also every time he opens his mouth, it seems like the stock crashes. So we'll be watching those things for the morning. Let's go ahead and drop down into some other charts and see what the day had going on. We'll just go straight down to the 1 hour, trying to make this video quick for you guys. Again, I know the biggest move happened during after hours, but we did have that nice sell down today. So if we're looking at the 1 hour chart, right, we traded up. We had this kind of, a little bit of consolidation, a little bit of up move, consolidation here between Friday and Monday. Right? We thought this might be manipulation as we saw price deliver to the upside, but what it ended up looking like is we had consolidation in here. We had a manipulation move to the upside, right? And because we set weekly high and weekly low all on Tuesday, that means distribution can come either way. So we ended up getting the manipulation to the upside. We got distribution. Are we going to see a reversal into Thursday that brings us up? Or are we going to see just maybe a little bit of a bounce and then further distribution or continuation? That's totally possible. Again, we're down here as far as price and after hours goes. So will that be, a bounce back, up towards the 240 range before we get a continuation? Or do we just straight reverse and see, a squeeze type of operation happening where it's going to take us back into the 240s or 250s? But regardless, we know what our levels are, right? We know that our levels are currently 228 and 212 being sell side. We know that, to the upside, we have a retest of the previous day low at 242. right? We have previous day high, we have our daily volume point of control, and then further up, if we get cooking that way, we have our 15-minute unbalanced price range, another daily point of control volume node, and an equal high on the 4-hour time frame up here all the way near 270. We're not anywhere near that. I'm not going to worry about that, but we do know that there's some stuff going on there. We also have some 1-hour fair value gaps in each one of these candles. These were nice, just continuous sell down. So every one of these candles actually holds a fair value gap except for ending here, coming down here. So we have a fair value gap here. We have a fair value gap in this candle. We have a fair value gap in this candle. So it would be likely if we did start heading up, we would see price pull into one or all of these fair value gaps. And if we busted into the 4-hour just for a real quick second, we can actually see there's just one giant fair value gap inside this candle. So all the way from 245 all the way up to 253, there's fair value. We're going to want to test that range at some point in time. It's going to be magnetic where price is drawn back into it. And so again, we're down here. Do we see price pull back up into that 250 range and then sell down further? That could be a total possibility. So we are watching that fair value gap on the 4-hour time frame. So if we drop down 15-minute, we start to see a little bit more of today's price action. The 15-minute opening range is what I often say to look out for as far as if you're day trading. Now, I wasn't taking any positions today as far as Tesla goes. I had no interest in trading, 100% IV, just in case you get stuck in a position. There's no chance to swing it. Your position will be burned the next day, even if you get it right. Even if you grabbed puts today since it sold off, the IV is still going to crush that position, and the profit's not going to be as much as it should have been. And then you always run the risk of the pre-market or next day rally where you bought a put, you can't close it because it's market's closed for options trading. Next day it comes up, rallies, your position is no good. So nothing I was interested in trading. Let everybody know, hey, not interested in trading this, and it is what it is. So if we look at the 15-day opening or the 15-minute open range, we do see that there was a nice trade in there. We had the 15-minute candle. We traded inside the range. We broke down from the range. We came back into it. If you took that trade the way I've been teaching you guys to take that trade, you trade 15-minute close or a breakdown candle of some sort. You could look on the 1-minute chart. Say you got it here, right? And we're targeting sell side liquidity, which the first level would have been targeting this liquidity down here, or you could have even targeted this. But we'll look at that full move down to the sell side, and then you adjust your stop loss accordingly to a 2-to-1, at least a 2-to-1 ratio. Okay, you can see that we never actually traded back up through that range. We did come down and hit that first minor sell side liquidity here, and then as that position unfolds, you could see if you want to draw it down even further, but we didn't hit that until after hours. So if you traded this one, nice 2-to-1, right, on the 15-minute opening candle breakdown in this case. So congrats if you caught it. That's a move that I continue to teach. I do think it's a valuable one. It doesn't play out every single time, but it is nice when you can catch it, and you're ultimately just targeting liquidity levels at that point. If we would have broken up, we would have been targeting buy side up here in the 268, or we might have targeted up here in the 260 level. So all of those would have been great, but in this case, we traded down through the 15-minute open range, and there'd be a nice trade on the board there. Again, if we drop down into we'll just drop straight down to the 1-minute chart. And for those day traders, you can see what's going on. We'll again, I took it off, but we'll look at that opening range, which was low here, high here, and then you can see there was some break. There was a wick that broke it, but you had a nice breakdown candle here. Okay, so again, I'll throw up the short indicator. If you would have taken the breakdown candle, and you would have targeted a 2-to-1 down to liquidity, we would have adjusted. Oops, yep, there we go. We would have adjusted. You could have ran that position up like that, and ultimately we did hit exactly to the wick. And if you look at where liquidity actually was, we'll draw a line out on there just so we can see where that trade would have actually been closed at. Could have looked at that liquidity, or you could have looked at that liquidity. If you're entering the trade like this, you're adjusting your stop loss based on the first one. So again, it's a 2-to-1 trade. So if we would have taken that first level of liquidity, we would have adjusted and you can see that throughout. After that first 15-minute open range, we never came back, hit the stop loss. Would have been a winning trade there. Could have adjusted to take the lower liquidity. Ultimately, we ended up trading even lower. So a nice 2-to-1 trade on that one. And that's all you're really looking for is a 2-to-1 on those kind of plays. Right? Other than that, you just see a lot of the same thing we just talked about. Really just sell down. It was a low resistance liquidity run today. There was not a clearly defined trend line. There was no trend breaks. If you tried to draw a trend line, right? I mean, you saw a little bit of kind of pop over of that harsh one, but you could have drawn a trend line there, and you would have gotten out potentially on this breakout here, which would have been a little bit ahead of liquidity. If you drew some other trend lines right here, we never actually broke on that one as well. So really low resistance, no buyers in the market. Not enough to run anything up. I think everybody was just scared. Earnings was coming out today, so there wasn't a lot of people willing to take that risk to add those long positions. So we got that nice sell down, and the fact that it sold down right to liquidity levels, and then again in after hours right down to the liquidity levels, that tells you the importance of the liquidity that's built up specifically in those order blocks, in those wicks, in those swing highs, or in this case, swing lows as we're going to the sell side. So I hope this has been helpful for you guys. Don't forget to like and subscribe. Share this with all your friends. Still got the contest going on until we get to 500, 1,000, and 5,000 subscribers in order to give some Rawstocks merchandise away to some lucky subscribers. Also, link in the Discord, or link in the description below to the Discord that I'm hanging out during market hours, and a bunch of other stuff going on in the description. So please check that out. Again, I appreciate all the support, and I'll see you guys on the next one.